My friends, what is going on? Let's jump in here and take a look at GameStop. You guys know the deal. Nothing I'm giving is financial advice. It's technical analysis. I'm just giving my opinion on what I feel like are going to be the most likely pass based off of what I am seeing on the chart. So if you like the video, please like and subscribe, all that good stuff. Follow me on Twitter, yada, yada, yada. All right, let's jump into the video. So GameStop, first things first, when in doubt, zoom out, right? Overall, the setup's looking pretty good. From a standpoint of, like I've talked about many times before, and please go watch my other videos if you struggle to follow along with this one, because I'm going to reference those at times. But we have a nice support resistance flip up here in this 24 to 20 area. As long as this continues to hold, that is going to be a good thing. Now, that's the good news, all right? Let's get into, I'm going to go down to the hourly basis. So overall, I don't personally like the look of the chart from an hourly standpoint. I've talked about before how I still think the most short-term bearish thing, but long-term bullish thing is going to be some liquidity sweeps in this area. So that's kind of what I want to explain, sort of make sure we're on the same page about. And I'm actually going to use some other charts to show you exactly what I'm talking about. And we'll also use GameStop. So here we are. I said if 30 is rejected, then we're going to see 25 really quickly. If 25 doesn't hold, then we're going to see 20 quickly. And this is where everybody was like, oh great, they didn't go up, down, or sideways. And all it did was exactly what I said it was going to do. So it came up here. We couldn't, right before the meeting on Monday, we got as high as like mid 29, 29.18. Immediately started seeing selling pressure. Meeting comes out. It's a complete flop as far as I'm concerned. You get that huge, strong shove down. I mean, this is a 12% candle, pretty much straight down. Now you're kind of pumping up and you're sort of rolling over here. In the Discord, we always call this an H. What this looks like is kind of a lowercase h. So you have a hard sell-off, then it just kind of floats up. This can typically either be descending triangles, rising wedges, bear flags, and then it just kind of rolls over and the sell-off continues. And you can typically map these out through extensions. So if I were to do that right here, and this is looking very micro, right? So we're on the hourly chart. So this would be something that I would be looking for playing out, this week, essentially. I'd be looking for somewhere in that 22. Outside move would be somewhere around 20, right? And I think that would happen relatively quickly. If we start to lose this support in this 23, which has been support back here, was obviously support on Tuesday. We start to lose that support, that selling is going to pick up. Also, too, this is, quarterly OPEX. So what that means is, with all the different option contracts that are out there, anytime you buy leaps, you buy way ahead of time, you're only allowed to do it on a quarterly basis if you buy it in buy them in advance enough. So June 21st is quarterly OPEX. So anytime you're at a quarterly options expiration day, there are thousands, if not hundreds of thousands, more contracts involved in that situation. So that's where the volatility can pick up. That's why you saw GameStop run the way that it did once Roaring Kitty established that position that it did at the quarterly OPEX of 20. That's why you saw such violent swings, and we're still seeing such violent swings, is because there's still a ton of contracts out there. And guys, gamma squeezes, and they work both ways, right? So just like you've seen sharp moves to the downside, and that's because as calls go out of the money and puts go in the money, that's constantly changing what market makers have to do. And so that's why you're seeing that increased selling pressure. And the reverse is true. If this price is moving up very rapidly, lots of calls are going into the money, lots of puts are going out of the money, that increases the market makers having to buy. So right now, especially below that 30, because a lot of people were positioned at that 30, and there's still a lot of 20s out there too. That's why I'm hoping, we see that 20 be a really strong bounce if we even see it all together. Archie on Twitter, which I highly recommend following him, he talked about how these option makers, they have to stay what's called delta neutral. I'm going to kind of oversimplify this, but essentially what that means is every time the stock was getting towards 30, the market makers were having to sell the stock. If 30 was shown as support, then that's when we could have seen that pushback towards 35 to 40. But because we did not see 30 hold as support, and then it turned into resistance, then that's why we saw that quick, sharp move down to 25. And the reality is we saw a little bit lower. We got as low as 23.61. So the most bullish thing that can happen short term is all of our, strong resistance that was back over here in this area, it continues to hold. You could argue that, yeah, we're going to, come down here. Sorry, let me move my hair just a little bit. So from a bullish perspective, you could say, yeah, we're going to come down here, we roll over, and essentially we create a big old double bottom out of this. That's going to be the most bullish thing that you can see, but that 25 area really needs to hold. If it doesn't, which like I said, this looks more like an H to me than it does a double bottom, because it's not a violent reaction like what you saw back over here. To me, this is looking more kind of like this descending triangle look, right? Where you have a flat bottom, and the reality is, right? Numbers don't lie, people do. The reality is all we're doing is constantly making lower highs. Even right in here, all we're doing is constantly making lower highs, right? Lower high, lower high, lower high, so on and so forth. And all that happens is this is consolidation in here before a larger move downside. Don't believe me? That's fine. I will show you. So on AMD, look, you can see me, I've already been drawing out these different H's for the Discord team. But I posted this one on Twitter that AMD, after going through this move right here, so it went through a sharp decline, gave us pretty much, this is once again hourly chart, gave us a head and shoulder look. Now we're pushing down. Here would have been the neckline to the head and shoulders, created a descending triangle into the head and shoulders, at the neckline of the head and shoulders, broke down, came up, retested, broke down again. Now, what are you seeing? Are you seeing a violent reaction topside? No. You're seeing consolidation as these EMAs catch up, and it'll probably continue to roll over. And what happened? There was news that came out that AMD was like hacked by China or something along those lines. I don't remember exactly what the news was, but this is a very clear breakdown, retest of that neckline, and then another strong reaction, push down, increased selling pressure. So exactly what AMD's chart, and guys, this is the market structure of what I'm talking about. So AMD's chart on an hourly basis, let's go back over here to GME's chart, right? Here, here, here. Now it's forming kind of that descending triangle. I wouldn't be surprised at all if we come down here, then come up, retest, and then push down below. So a quick violent move towards 20, then push back up towards 23, 24, 25, somewhere in there, and then curl back over. That is, it wouldn't play out necessarily exactly like AMD, but overall this is what you see. This is not a strong look as far as I'm concerned, especially if we lose this support over in here. Now, going back to my video that I talked about before of what do liquidity sweeps look like in the market and how does it take everybody out. So remember, I talked about this double top right here, and I said there would be a trend line that would form. You would do a liquidity sweep above this double top right here, then you would start to sell off. And the most bullish thing that you could see would be a move that takes these lows out over in here. It doesn't have to take all of them out, so it doesn't mean, okay, well, I have to wait till 1750. That's not what I'm saying. But this is the area, if you will. So essentially anything below 20, there's no risk to reward of being short on this. And think about how, the reality is, think about how panicky a lot of people would be like, oh, we're below Roaring Kitty's cost basis. What if he sells? What if, that kind of stuff. And, like I said, there's going to be people out there like, I would never sell, bro. No sell, no sell. Same thing with RK. He's the GOAT. And I agree. I think he's a GOAT. But at the same time, some people are going to get tested, right? This would test the mental fortitude of this thing. And that's what the market's designed for. The market's designed to test your mental fortitude, not just on GameStop, but any stock. So a move, if we get there, like I said, it's not going to go just straight down, but you'd want to see a violent recovery here to feel good about this. Okay? I don't want to see any type of move down here that then continues to trade sideways, because then we could absolutely keep, distributing on down. Do I think that is the most likely path? No. I would love to see personally a sharp move to the downside, basically followed by a V-shaped recovery. Let me explain exactly what I'm talking about. So let's use yours truly here, GameStop. So back over in here, and I'm not advocating for this type of move afterwards. I'm just using this to show exactly what did happen. I mean, that's the reality of it. So back over in here, you made a double bottom on GameStop that took, let's see here, 192 days. So basically took 6 months, right? And then this is exactly what I'm talking about here. Once it came down here and it made contact in this double bottom range, you didn't have a violent reaction, right? It just kind of like slowly walked up. But the reality is what is this? This is March of 2020. This is COVID time, all right? So COVID shows up, entire market sells off. Anybody that was right here in this double bottom area, so if you bottom tick the absolute lows of GameStop, anybody that was in here, if you had any type of stop set up, all those stops were taken out. But then what happened after that? An immediate V-shaped, strong recovery at that point in time. This was a, 2 days, so a 6-month double bottom, and in 2 days it was swept and gone, already back up. So what does it do? Anybody that was down there, it doesn't even get them a time to get back in it. And then 7 days later, 152% move topside. Now, obviously, still cooled off and consolidated after that, essentially in kind of a little falling wedge. Look here, right? Bull flag / falling wedge. But then, as they say, the rest is history at that point in time. Another example, Nvidia. This one was crazy. So, right? This is where Nvidia. Oh, everybody's going to play the head and shoulders, right? Right down here, this is when China was going to ban Nvidia chips. This is the first day that Nvidia broke below that key 400 level. So obviously they've done the 10-to-1 split since then. But one day, and then not just a little bit of a reaction, a violent reaction topside. Same thing. 26% move 10 days later, which on a stock like Nvidia, that's a big move. Remember, this was at 400 at the time. So it ran from 400 all the way up to 500 essentially in 2 weeks, right? Violent reaction. That's how you know there's a good liquidity sweep going on. And then what happens? It peaks over, high volume, peaks over, bullish engulfing. Yeah, this run's going to continue. Let's go. And then followed by 2-3 weeks of selling off. But all it did was come back here, consolidate, before then you really got the move, right? And this was when Nancy, I believe, jumped in. So, Nancy, go buy some GameStop, right? Or a Roaring Kitty or a Ryan Cohen, go buy some more GameStop. News like that would be pretty crazy. So, let's kind of come back to the same thought process, right? So, if you did see that sweep of these lows coming back and testing, getting below, Roaring Kitty's cost basis here for a little bit, that would, regardless of what anybody says, that would create, some fear, some panic, but then you'd be looking for a very strong V-shaped recovery. I think, my personal opinion, is you're going to see selling into the June OPEX, because you're going to have, like I've already talked about, you're going to have more and more calls that keep decaying and more puts that keep coming in the money, as because there's way more calls than there is puts. So as those puts go in the money and the calls keep decaying, that's going to increase the selling pressure. So really post-June OPEX, so post this Friday is really when we want to see, like, hey, we want this thing getting topside. What you don't want to see is a move like this. So if, let me actually grab my little brush tool. Where is it? There it is. So you don't want to see a sharp move to the downside and then just more sideways. Like I said, we want to see a V-shaped recovery. Let me go back to Nvidia. It doesn't have to play out the exact same way, but these are when they're the cleanest. So not only did Nvidia gap down, but that China band comes out, Nvidia already gaps down. What is this? Almost 2%. And then that very first 15-minute candle is just straight down, where now it's down 5%. But then what happens? It never sees another low after that. So something that looks like this, so even if it's sideways right here and slowly creeping up, we just don't want to see it flatline, if you will. We want to see some type of good strong reaction, and then you go back and look at it on a daily basis, and the reality is if I can find it, I guess the reality is it was a strong, here we go, there we go, sorry. So love some type of candle like this. And what do you also see from a volume perspective? So that sweep happens, high volume hammer candle, and then of course the rest is history. But just like Nvidia, there was red days after, right? Let's go back over here to GME. Whoops, my bad. Just like I talked about, back over in here. Oh, my bad. Not in the right spot. It would help if I was in the right spot, right? So even if it's a violent move and then it consolidates, that's fine too, right? Let the IV be your friend. If you do get, a violent move topside, you want to sell some covered calls or anything like that, that's up to you, in your decision. But don't chase the IV. Let it cool, and then once it cools, if this move does happen, right, that IV on those calls is going to cool off, then that's where you start looking at it potentially. If options is your thing. Right? I love volatility, so that's why I love, meme stocks. That's why I love Tesla. That's why I loved Nvidia before it split. I like volatility. That's what I use options for, is I use them to capture that volatility when I see a good sized move coming. So we get this move, right? Just like I used options to capture this move right here. So I would like to see some type of move here, but then I'd want to see a pretty good solid reaction that a floor has been put in. If we get that V-shaped recovery, like I've talked about, then I would feel very confident about a floor being put in, and I don't know that unless something crazy happens, I don't think ever see GameStop coming back over in here. Now, like I said, from a bullish perspective, the way this could be invalidated is reclaiming 30. Any type of pushes up towards 25 or even 28, any rejections up in there, that ain't it, my friends. I'm telling you, you need to reclaim 30, and you need to see that these market makers aren't going to sell it off every single time it hits 30. Otherwise, you'll kind of ping pong, which is certainly possible too, right? So if we maintain support and we just ping pong the next 2 days, overall that's not a bad sign. That reality is the longer we trade in these ranges, the bigger the floor is going to be. Just like back over here. This wasn't fun, essentially kind of trading sideways right in here, but first time you revisit it, very strong reaction. Said, I just don't like this, the fact that it is just barely weak and popped up. This, to me, is the most likely thing of, and you might even get, one more kind of curl up before a dump, but I don't like that it's acting weak over here. Plus, when you have the knowledge of what's going on with the option chain. So, I hope this video was helpful to you. To be honest with you, I already made one, and then I went back and the audio was messed up on it. So this is my second time going through this. I hope I wasn't too all over the place. I hope it was helpful and helps keep you informed. Like I said, so that just that way you can make great decisions for yourself, your family, and your portfolio. So I still think the most likely path is short-term bearish, followed by a larger bullish move is going to be what I would like to see more than anything, but we'll see, right? None of us are fortune tellers. We're all giving you our best educated decisions, but this is not a bullish structure as far as I'm concerned. This is still short-term bearish, followed up by another potential bullish move, but we shall see. Much love, my friends. I hope this video was helpful to you. Like and subscribe, all that good stuff, and I will see you in the Twitterverse tomorrow. Have a good one, my friends.